Thanks for tuning in to Look at My JPEG, the podcast that discusses NFT, DeFi, and NFT financialization. This is your host, Xerox Jose, the founder of nftperp. The reason why I want to do this podcast is because there's just not enough people talking about NFT financializations. In this podcast, you can expect us to invite guests that are builders, founders, even investors that are deep in the NFT financialization space. We'll discuss their story, what they're building, and how you can get involved. So thanks for tuning in. All right.
GM,
sir.
how's it going?
It's going fantastic. Welcome to the show.
Good. Thank you very much for the invitation. I think it's long overdue.
Absolutely. Are you where in the world are you right now? Are you in Turkey?
No, I decided to stay here in Dubai. I think conferences are mainly for bear markets, and when the market is moving, I don't really intend to start traveling and go to a bunch of these talks. If the market quiets down, then I'll head through. Other than that, I think now is the time to essentially be locked at your desk, grinding away. I mean, so the bear market's for thesis formation, and now it's the time to execute on those theses.
So when did you think that the bear market has ended? And when was like...
Yeah, that's a tricky question. I think for me, one thing I really do rely on is sentiment. And I've seen some pretty horrendous sentiment. But yeah, I was working Rock Capital, which was a hedge fund based out of South Korea, and obviously went through the entire 3SE liquidation, went through the entire Lunar event as well, the Lunar collapse, and then also FTX as well. So it was kind of like this systemic deleveraging that really showed the potential for contagion risk and daisy chain of leverage. But yeah, I think to me it started to end around about those sentiment levels. One of the ways I like to view markets in general is there's a mean level. It's like in trading, right? When there's an upwards trend in the market, the market will deviate from the mean, but it'll always revert back to the mean. And I think that is very much the same in bull and bear markets as well. So I was kind of like looking for the minima, which is kind of like the maximum level of depression, and like the maxima is the maximum level of euphoria. I think once I seen those sentiment, or once I seen the sentiment after FTX, then to me that was kind of like we're going to see a mean reversion back to more sane levels. So I think that was kind of like a really big fact in the way that I view things.
So you're talking about mean reversion of sentiment,
Correct.
of emotions, euphoria versus like absolute the depth of like depression.
Yep.
Type of very interesting. It's very okay. I like that because I'm going to put a pin on this, and hopefully we can talk about this again later in this talk. And I want to dive a little bit deeper on like how you trade communities and vibe and identify like narratives that way. Before we get into that, for those that don't know who you are, give us a quick intro of yourself, your quick journey, and then what you're doing right now.
Yeah, sure. So I got into crypto in 2017. At that time, I was at university, and I was basically using all of my student loan to essentially gamble on BitMEX. But during that time as well, I was studying chemical engineering, so I was kind of like working with the head of my department to get wind turbines to work underwater. So I was very much interested in renewable energy and climate science. After that, I basically read the Bitcoin white paper and didn't understand it, and didn't end up going to university for like 6 to 8 months. And I just went really deep into cryptography, distributed systems, and economics as well. So after that, I did a master's degree in computer science, 2018, 2019. And my dissertation was all on Ethereum scalability. So back in the day, it was like the very old scaling solutions like Plasma and state channels. Mine was actually focused on generalizable state channels and also zero knowledge rollups. And this is where the scaling solutions, they were just mere academic ideas. There's no ZK sync. The Optimism team was actually the Plasma team in 2018, 2019. So I did my dissertation there. I worked as a Solidity developer for a brief amount of time. Left because I kind of needed to make money in the financial markets. So worked as an analyst for a while, operating a lot on the secondary side. And yeah, I was just working with teams. And then the last year and a half, I was working with a hedge fund, a multi-strategy hedge fund in South Korea called Rock Capital. Decided to leave in April. And I think I'm working on something right now which I cannot disclose, but it's kind of like a natural step from the previous job, if you catch my drift. But yeah, working very hard on something right now, and hopefully can share a little bit more in around about 4 to 6 months' time.
Okay.
Did I catch that? Did you say that you were trading your student loans?
Yeah, absolutely,
Bullish.
100%. So this is quite funny because I blew up 3 derivatives accounts on BitMEX as well. So I had to basically refund the accounts just by working in a bar. So yeah, I learned actually a lot through one emotions, and my main problem was revenge trading. But kind of like being a lot more objective, a lot more emotionally sound in markets, and trying to find where the moments in time where the best edge is available to essentially bet the house. So that was kind of like the way that I was approaching things. But yeah, I was gambling on my student loan. God bless the
Yes,
system, right?
as someone who's blown up an account before, I can resonate. Yeah, it definitely hits. Yeah, maybe we could jump into. So you said bear market is for building theses. Maybe let's talk about some of those that you've developed, and yeah, how you're trading it as we kind of like hopefully come out of the bear market.
Yeah, absolutely. So like some of the main theses which I was focused on, I was very much focused on Web3 gaming for the last year and a half, and I kept like quite quiet in regards to that. I have a lot of research reports that I need to publish with respect to those theses. But yeah, I think Web3 gaming is super useful. One of the core axiom that I was basically using to develop frameworks is one is what is going to bring the most amount of capital into in the ecosystem, and two, what is going to bring the most amount of users into the ecosystem. And from a capital perspective, I'm very much inclined that over the next 5 to 10 years, the tokenization of real world assets will bring the largest amount of capital into the ecosystem. And secondly, I do think more of these novel ideas that are not really tied to speculation. So right now, like 95% or more of the on-chain activity is inherently tied to speculation, and speculation is inherently unstable or unsustainable, and that's why you have the crypto summers and winters, right? So that's all to do with speculation. So my premise was kind of like, what can we do to change that? Speculation is the end goal of on-chain activity, and one of the main ones that I came up with was fun and entertainment. Gaming is a very sustainable activity and one of the largest growing industries over the next decade. And Web3 gaming was very interesting to me because the action was a precursor to the settlement. And what I mean by that, there's a history of people trading digital items before blockchains even existed. And one of the main examples of this is Counter-Strike. And a lot of people would trade these skins on a website called OP Skins, but a lot of people actually sold their Steam accounts. So the Steam accounts were kind of like functioning as a wallet, essentially. So it's one of those things where the market behavior actually existed before the settlement layer. So that's why I thought Web3 gaming was interesting, and real world assets are very interesting to me as well.
I appreciate you teeing that up. I feel like Web3 gaming, and I believe like you and I talk quite a bit, and I think like that's one of your main theses in your previous fund as well. A lot of your time was spent on, looking at Web3 gaming and different verticals. Do you feel like that gaming sector, like there is a need for NFT financialization protocols, like lending and borrowing option, maybe even perps?
I don't think so much with respects to gaming. I think lending could definitely be a possibility. I don't think perpetuals are needed.
Mhm.
I think perpetuals. I mean, this is probably a good idea to go into the thesis behind NFT perp, right? So the reason why nftperp was very interesting to me when Joseph was raising for the seed round is because NFTs suffer from a speculation cost problem, meaning that as the floor price rises, it prices out more and more of the market. So there's two ways to solve that problem inherently. It's through fractionalization or it's through perpetuals. And perpetuals were quite interesting to me. There's some regulatory concerns with respects to fractionalizing NFTs, which I didn't really want to get into. But I thought perpetuals were a really great solution to that. So that was kind of like the issue that I think NFT perp was solving, but it was more for like these I can't say this word. Is it Viblalan goods? Like basically high quality goods, that are digital items like Bored Apes, Suzuki's, and yeah, just tapping in more into more of the market that was previously priced out. I don't think that is going to be applicable for Web3 gaming per se, but I do think lending and borrowing of these Web3 gaming skins could actually be like quite an interesting way for players to monetize their own in-game assets by lending them to other players when they're not using them. So I think that is probably where NFT financialization will happen in Web3 gaming, but yeah, not so confident on the perpetual side. Let me know if you think that any differently.
Yeah, I feel like you need to have a very universal pricing mechanism for a large collection for that to work. And in some instances, like a lot of the gaming assets, perhaps the way like supply works is different, and like the way that specific item cost is different. It's hard to have a unified way to appraise all of them, and therefore market might be a little inefficient.
Mm-hmm.
So Ryan here, my co-host, actually previously started one of the biggest lending DAOs called Goblin Sachs. The incredible thing about NFT lending and borrowing for really like money market wise, it's the rates just beat DeFi lending and borrowing by a huge amount. And Ryan can speak a little bit more about that in terms of like what's it like operating in lending and borrowing for NFT markets, and if gaming plays a role in there. But yeah, it's quite interesting in terms of like how much opportunity is actually out there.
Yeah, I mean, I think generally speaking, like I think one of the challenges of lending and borrowing against gaming assets right now is relatively like most of the projects are still fairly immature. So the APRs are probably not like extremely attractive for borrowers. But that being said, like the market will mature over time. I'd be curious, McKenna, just like actually bringing back to like trading more liquid assets versus illiquid assets. Um, I'm assuming you've done both. How do you? What are some of the differences? I guess in how you trade, and I guess like your strategies behind trading the liquid assets versus liquid.
Yeah, I think the core thing here is obviously position sizing. Trying to find a counterparty in a liquid markets is quite difficult. I think one of the most curious things I've seen in recent memory is where kind of like an illiquid market became liquid, and that was with NFTs and Blur. So Blur was kind of like incentivizing liquidity or incentivizing bids on the core NFT collections, and inherently, if you're, let's say you got like 50 Bored Apes, in order to get out of that position, it's very, very difficult, and you'll end up collapsing the floor price. So the execution of like these inherently liquid assets is very difficult to just capture what they're valued at that period of time. But Blur changed that, which was very, very interesting. It just introduced a bunch of counterparties which didn't actually want the assets themselves. So it's kind of like passing the NFT down the bid ladder and just watching the floor prices collapse, because that in general I think was a once in a lifetime liquidity event for these blue chip NFT holders to exit. But yeah, I mean, with respects to more of the liquid market, so I like to use execution software. I use sandwich trading quite a lot just for getting in and out of markets. But yeah, always just kind of like evaluating desired position size, if it's on centralized exchanges or decentralized exchanges. Some of the times I'm willing to buy in a liquid asset in hopes that it becomes liquid in the future. And this is kind of like just a high EV play where you're accumulating a very low cap and hoping for an exchange listing in the future to essentially get out of that position. But yeah, I mean, high slippage certainly does occur with these liquid assets. I'm not too good at NFT trading. I must say that. I mean, last cycle I bought an invisible ether rock for $40,000 and it went to zero. I
Love to hear it.
Sorry?
I said, love to hear it.
Yeah, bro, it wasn't great.
Wait, so Ether Rock and it's invisible?
Yeah, so it was a white NFT and it was called an invisible ether rock. And I bought it for $40,000 and it went to zero. So it is what it is. But yeah, I mean, there's definitely a few NFT projects I'm interested in right now because I certainly did my homework over the bear market. But yeah, not really interested in buying stuff like the blue chips. I'm trying to find the next blue chip, but I have a few ideas in mind.
All right, dude. So I want to get into this because I think it straddles both a more liquid trade versus a liquid. Let's talk about Ticker Bitcoin and Sproto Gremlins. And I saw you change your profile picture for one day to Sproto, so you're gonna have to, I'm gonna have to ask about that.
I am a Sproto by heart. No, I think this is one of the. Actually, this is going to get onto a kind of a trading thesis. So I speak quite a lot with Andrew Kang from Mechanism, and I think one of the things that he taught me last cycle was to invest in cults. But what that means is kind of like when you observe this cult-like behavior, these individuals are very much less inclined to sell assets. And a prime example of a cult driven by fundamentals as well is Chainlink. And Chainlink essentially had like the best memes. They had the best diamond hand holders. No one's going to sell. I think the Chainlink holders are literally still holding, but they are going to make it all back this cycle. I'm very confident of that. Chainlink will definitely go to a new all-time high. Yeah, I think obviously I'm a very big proponent of like these cults and also good memes as well. And I think this investing behavior certainly happened last cycle. I didn't really do well with the meme coins last cycle, but I'm doing very, very well this time. Just the whole dog coin phenomenon it wasn't funny. And it didn't make me laugh, but these kind of like Zoomers, schizo type stuff, it really does make me laugh. So I'm much more inclined to I just buy stuff where I laugh at the memes, to be honest. And the memes have to be organic. But yeah, I think the Sproto Gremlins are a really curious one as well because they are a liquid, but they're actually the worst NFT I might have ever seen, but in a great way because like this, it's got an absurdity factor to it where I actually just want to rock one, right? I got some I ordered some of the Bitcoin or the Ticker Bitcoin merch, and it's actually fire, to be honest. So. But I think from that perspective, Sproles are interesting because they're awful. But you can also have stuff that's just awful as well. There's I can't remember what it was. There's some team. I think it's called not Hasbullah or Azabullah. Last cycle is the worst NFT drop I've ever seen. That's just plain awful and not a humorous way. So that would have went to zero quick. But I actually think the absurdity factor of Sproto Gremlins. Actually, here's a controversial thing to wrap it up as well. I think Sproto Gremlins next cycle at some point are going to flip Miladies, and I'm very much a big proponent of the Milady community. But I do think at some point Sprotos are going to flip Miladies. But you can't have
Hold
just.
on. Floor price or market cap?
And say that again. Sorry.
Floor price or market cap?
I think floor price, yeah, because they're like 1/3 the size of Miladies. But yeah, I think floor price.
That's not a hot take though.
True. But a lot of people don't think that's going to happen anywhere. I spoke with a few people and they're quite against it. It was like, there's no way that's going to happen. I think it is.
Joe, don't shit on our bags, bro.
I'm not shitting on your bag. I'm just saying, if you want to give it a hot take, give it a hot take.
It's still flipping the floor is hot. Look at the PFP, dude, and then you'll see it's a hot take. So
Well, a hot take is Ticker Bitcoin's going to 10 billion minimum.
Yeah. Actually, I saw
All
some
right.
dude at my gym. Actually, so I live in Texas, rocking some Bitcoin merch. And I like walked up to him and, clearly like, he just looked like a dude that would, you know, wear some of that, just rock it at a gym. And yeah, I think the guy was like, I don't know, he was pretty stunned. And yeah, anyway, I don't know how I felt, like if it was a positive reaction to, if I felt better about Ticker Bitcoin or Sprotos after it, but
Stunned as
fun
in like
fun
stunned that
fact.
someone else in real life knows what Bitcoin is.
Well, yeah, that was it. Yeah, that was like, it was kind of like seeing like a unicorn in the wild. So
Based, to be
Uh,
fair, extremely based. I've seen a few people here in Dubai wearing the Harry Potter Obama Sonic 10 in new t-shirts. I need to start rocking them at conferences. That's going to be my on my to-do list, I think.
man, I need to get out of Lisbon. I've been seeing people wearing like Litecoin or like EOS.
That is NGMI vibes, bro. They're not going to make it.
Yeah.
uh
By the way, I wanted to do a quick just audience for those that are listening. If you have questions, if you want to come on and speak or ask us anything, feel free to raise your hand and request. Basically, from now until the end of the pod, and we'll bring you on at the end of the pod. Just a
Yeah. All
quick heads up.
questions
Yeah.
welcome.
Yeah.
um
Exactly.
are you messing around with any of the Solana shitcoins right now?
So I'm not, but I find that super curious behavior. I didn't really see that last cycle. I've been speaking with a few people who have been trading these Solana shitcoins, and they said it's like base chain when it first launched, or Doge chain. Like during that 5 day period, all of these shitcoin honeypots basically came off. Um, but I actually do think long term that will become a thing. People are just sick of the gas fees on Ethereum, and I don't really see people shitcoining on Arbitrum or Optimism. So I do think people might end up shitcoining on Solana. I find that super interesting. I did have a really great idea previously. I don't think I ever told anyone about this, but I'm not going to do it anyway, so I'd love to see someone else do it. I speak with a lot of the roll-up as a service teams who can basically deploy like a roll-up in 5 minutes. And what you should do is you should have a roll-up just for shitcoins. Make it like an absolute shitcoin casino. You just have all you have on the exchange is an instance of Uniswap v2. You make the front end as gamified as possible, and you allow people to use like Pepe or Ticker Bitcoin as the gas tokens on the roll up, and just make it as degen as possible. I think something like that would do super super well. But unfortunately, like I don't really want to be labeled as a fucking scammer. But I think it's a sick idea, and it would do incredibly well. And I'd invest in someone who does that.
It's just a pure like PvP environment, right?
Yeah, max PvP, bro.
uh, okay, what I find interesting lately is, well, obviously this cycle has a ton of like really interesting meme coins. Um, the SPX is one of them. The Mog coins is one of them. Um, I've noticing like ever since Ethereum and Bitcoin, like BTC markets start recovering, it seems like a lot of the PvP like people that are in profit are just kind of like leaving and going back to Ethereum. Do you find that as well in terms of like more risk off ish assets in crypto?
Hmm.
Kind of I'm saying risk off and uh, you know what I mean? Like I
No, I
feel like
understand.
there's a BTC dominance play here. Maybe that's towards Ethereum.
So
Um,
I find it super interesting with the meme coins kind of like taking a bit of a lag. What I do think is, I actually don't think retail's in the market now. I think a lot of this is an institutional bid. And for me, one thing that is kind of like going to trigger retail coming back in, I tweeted this previously. I think what's going to happen with this disbelief rally in general, or this is my generalized thesis, BTC dominance is going to go sky high. especially with the ETF literally around about 54 days away right now to being confirmed. Bitcoin dominance will go sky high. Once that, on the day that the Bitcoin ETFs were approved, immediately capital will flow from BTC to ETH. And that's when ETH BTC bottoms, that's when ETH beta performs very well, and you'll end up seeing like 50 to 100% days on these alts. When people see that, that is disbelief. This is not like 20%, 30%. When people see fucking 50 to 100% on majors, that's when it's going to be disbelief. And that's when I'll be much more inclined to sell. And then to finish off with this disbelief rally, if Doge and Sheeb go 50 to 100% within a week, that is when retail will step back in the market. I've already had people who are like retail investors asking if they should buy Doge. So I do think Doge will probably end up going to $1 this cycle. It has to fulfill the prophecy. You've got Musk backing this with on the X platform, but I think that is it's not BTC and ETH going up, it's the old dog coins going 50 to 100%. That'll bring retail back into the market, in my eyes.
So this might be a shitty question, but I really don't know the answer. How does so you mentioned earlier that really people are fed up with kind of like the gas fees on ETH, right?
Yep.
So you just mentioned like with all the catalysts, with Bitcoin coming up, the ETFs, the halvening, etc. You'll get a flow into Bitcoin, then it will flow to ETH. Does that and naturally that's going to drive probably some congestion, right? Do you think you get a derivative play to stuff like Solana? And then also I wanted, because I know this is something we've talked about in the past. I think it's EIP 4844, the proto dank sharding. How does that play into everything?
Yeah, that's a very good question. I wrote about this in one of my very first theses, maybe a year and a half, 2 years ago. I think it was towards the end of 2021, or around about that time. So yeah, I think one of if you look at things from a first principles perspective with respects to the Ethereum roadmap, you realize that liquidity and general execution cannot coexist on a monolithic layer one. So Ethereum's plan is to scale with rollups, which is absolutely fine. But what that does mean is there's several different execution layers, and with several different execution layers, you get a fragmentation of liquidity. So it's one of those things. It's like, where would Curve or Uniswap go if they weren't on the Uniswap? If they weren't on Ethereum layer one, they could go to all of the chains, but then that's going to have like a fragmentation of liquidity, and it's just going to reduce the trading performance for traders, increasing slippage unnecessarily. So it's kind of like this really big problem. I think that can be solved to some degree with, and then that was like a fundamental proposition I had last cycle. I was like, how do you solve this? And I think the only way to solve it is through a generalized messaging system. And I think that's why I'm so bullish on interoperability. I think that thesis is correct fundamentally. I don't think the market is basically taking that seriously anytime now. I think once layer 0 drops, people will become a lot more interested in the whole generalized messaging system space. But I actually do view it as one of the most important architectures in crypto. But yeah, right now to like go into EIP 4844, this is kind of like an immediate scalability upgrade for optimistic rollups. Right now, a transaction on the layer 2, it's essentially the layer 2 execution cost plus the layer 1 security cost. And the layer 1 security cost is very, very high. The transaction data is essentially posted to the Ethereum layer 1 using something called the cold data opcode in the EVM, which is very high in terms of gas. So yeah, the EIP 4844 upgrade is a new way to post data to the Ethereum layer 1 without that opcode. And it's going to reduce the amount of cost to post the data by 10x, which is huge. So that's an order of magnitude scalability on Optimism, on Arbitrum, on any optimistic rollup. That's an order of magnitude scalability increase, which is absolutely huge, and that is sooner than people think as well. I think for predictions, it's going to happen sometime in February. But I know the very first testnet for Denkun was meant to be earlier this month. But I think it'll be most likely towards the end of the month. Been keeping very much up to date with the dev nets and the issues that clients have been reporting in general. So yeah, I do think Denkun is closer than what people think. And it's kind of funny. I actually think around about the very first testnet of Denkun, the Bitcoin ETF will get approved. ETH BTC bottom gets put in, and then we'll see huge rallies on Arbitrum and Optimism respectively.
Did you say end of this month, Denkun?
For the first testnet,
Testnet,
the
okay.
actual mainnet will be around about February next year, I believe.
Oh, I'm so excited.
But that's one of the curious things from a trading perspective, right? If we take a look at the merge only began to get priced in, and this is when the market was like worst sentiment ever, right? The merge only began to get priced in on the very first testnet of the merge. From the testnet until mainnet, that's when the actual catalyst got priced in. So I do think, yeah, a lot of people have said to me EIP 4844 is already priced in. I'm 90% confident that they're wrong, and I'm willing to bet against that. I'm kind of gig along Arbitrum and just patiently waiting. I bought Arbitrum at $1 spot, and then I built a sizable derivative position at 0.8 as well.
I have a feeling that application level, you could say like consumer facing products that is most likely going to trickle down and bring on demand for all these rollups and platforms, and then fundamentally, the usage of Ethereum and blocks. That's what brings in, Ethereum the most value. Do you feel like there's always going to be a lag in terms of like following the cycle of the Bitcoin halving, and then like as the price goes up, it brings in retail, it brings in consumer facing product usage, and then it drives up the actual scalability of the underlying protocol?
And can you repeat that question? I don't think I understood with respect to scaling the protocol.
Yeah. So like my point is this, right? Like if there is not a ton of people actually using blockchain
Yep.
applications that are on, let's say, on Optimism, on Arbitrum, whatever it is,
Yep.
if simply the demand isn't that high, there's no point having essentially like a high scaling throughput protocol because there's not enough people using it.
Yeah.
But you can make a case that if the underlying asset or the environment is buzzing, a lot of people retail coming in using the product, then it subsequently drives up the demand for the protocol itself, and therefore the appreciation of these rollups, tokens,
Yeah. Yeah,
and underlying protocols.
100%. I think that's very important in market cycles. One of the most important things that I studied was like the theory of reflexivity and how important price is as a signal. And kind of as a joke, I say to many people that uh, how good a technology is directly proportional to its price. I don't think many people really understand the actual power of just a number going up. Because it's the only thing that's directly correlated to your emotions, and emotions are what drives markets inherently. And then obviously when you see exuberance in other people, this is kind of like how a cycle starts, right? Your friends say, "Oh, I made X amount on Bitcoin," and people's ears prop up, they get very interested. Word of mouth begins to spread, and that's how like these bubbles begin to form, these manias begin to form. But it's all driven by a movement in price. I think that's kind of happening right now, and that's what kicks off this reflexive cycle. I actually have this really great trading idea that I was speaking to a few people about last cycle, and I think it's very true. And I call it the meme bid. So if I could just take 2 minutes to kind of recap what I mean by that. Like in the theory of reflexivity, it's like with the sentiment mean reversion that I was discussing with previously, right? There's kind of like an actual reality that is it's like the fairest value possible for a market based on its current operation, right? So that underlying reality always exists, but the actual market that you see, it's a derivative of people's perception to that market. So there comes a point in each cycle where, in a bull cycle, the perception of the market will begin to deviate from that reality, and that is actually the most optimal point to buy. if you do not want to suffer any of like the potential downside risk. And one thing I found that's very correlated with that point in time is people posting memes on the timeline. So I view like when people begin spamming memes, and I seen this when Bitcoin was around about 15K last cycle, people just spamming memes on the timeline. And that to me just showed that the market participants' perception of just began to deviate from reality. So I call that idea the meme bid. And yeah, I just think that's the most optimal time to bid in the cycle.
Yeah, we are a creature of habits, like in terms of like what people are perceiving, as a buying time or selling time.
Yep.
Um, Specifically speaking towards retail, right? And technically, as a trader, you want to trade the opposite of that.
Yep.
One really interesting thesis that I have a really close friend. He's very deep into AI and layer one development. He has this thesis around like the entire market cycle really revolving around the Bitcoin halving. And the idea is that since early days, like in 2009, 2010, so the early days of Bitcoin mining, there were a lot of Bitcoins were mined by individuals. And for them to be able to sell it, they need to do it on Bitcoin Talk, like OTC. It was very difficult. When Mt. Gox and all these exchanges actually pop up in 2013, 2014, you can actually sell your Bitcoin on exchanges a lot easier. And every time Bitcoin has a halving event, like essentially their profit gets cut in half, right? And you're using the same amount of resources in your mining rigs, your profit's getting cut in half. There's really two things you can do. You can buy twice the amount of your mining machine to double your production. But if everyone else does that, then the difficulty readjusts and you end up with the same amount of Bitcoin. So the other thing you can do is you can promote the Bitcoin price to 2x from where you're currently at right now, so you can make off for those difference and continue to be profitable. So this thesis is that every cycle, the miners who's actually holding on inventory is going to do their best to promote Bitcoin and bring in, and that could be driving down the price, that could be promotion through different exchanges and whatnot, and it essentially brings down distribution to the retail. And I think there's a interesting case if you look back different periods of market cycle and different timing, it actually lines up pretty well.
Yeah, I think it's very important. I also think another thing to add to that as well is kind of the propagation of narratives with respects to Bitcoin. And one of the things I do like to say is price leads narrative. So I think in general, the early days of Bitcoin, they wanted it to be like a very fast velocity money, essentially. So when Bitcoin was extremely cheap, they viewed it as a money. But once Bitcoin became very expensive, less and less people began to use it for payments in this high velocity manner. And it very much became a low velocity asset, something much more akin to gold, like a store of value. So yeah, I do think the narratives are quite important and they do change with price, and the halvening is obviously one of those things that drives price. It's almost like a ritual where something will happen in the market and then everyone's perceptions change essentially with it. And it's always had an excellent hit rate in the past as well. But yeah, that the cut in inflation in general, especially when people begin to view it as a store of value, and now that you're getting actual legitimacy from the likes of Larry Fink, who are basically praising Bitcoin as a store of value, then that narrative just becomes even more reflexive as well. So I do think one day we'll definitely see Bitcoin at $500,000. And I know like these targets seem, how would one say, it seems unrealistic to some degree, and people don't want to believe it. But
Or arbitrary. Yeah.
yeah, I think back in the day these people were right, but it was kind of just missing out all of the things that needed to get there. And I can definitely see a path where Bitcoin in the next 10 to 15 years does hit around about $500,000.
So I'm gonna change gears a little bit, if that's cool. So we've gone kind of deep on some things, and I want to cater to more, I guess, like the people like me who maybe just like the I would say very novice trader. Um, what would you say, like, you know, when when you are trading, like what advice would you give to someone new? Number one, and like I guess like what are some of the like, because I think part of trading is like, I imagine you just have to get wrecked enough to learn. That's really kind of like with anything, right? Like you just do things and fail and learn from it. But I guess like what does like some of the progression look like going from like completely novice to someone like yourself who's more experienced?
Yeah. One, it's a very complicated journey. Everyone has like a different trading system, for example, and there's many different ways to operate in the market. But if I was a beginner trader, there is a really important fundamental lesson that people still slip up on as advanced traders, and it's something so simple as understanding market structure. Market structure is like, are we in a trending environment or are we in a trendless environment? So markets go through four phases: trending upwards, distribution phase, trending downwards, accumulation phase. And if you can just understand those patterns where you see them in a chart, that is such an important thing that so many traders miss. I mean, a lot of these altcoins that we can see right now, they've been in a cute, like Link. I remember when I was posting Link, um, when it was like $8, and I was like, this has been in an accumulation range for 16 months. Like the price has been between, let's say, 6 and 12. Eventually, that shit's going to break out. So, and that's exactly what we've seen. And trying to find these points of maximum entry, especially on the downside risk as well, if something's been distributing for a long period of time. Another example of this is when Bitcoin was ranging between like $50,000 and $60,000, struggling to make new all-time highs. It was wicking above. There's a lot of supply that was coming in. That's kind of like an indication to take some risk off. So yeah, I think one of the main lessons for people is understanding market structure. But market structure is always driven by fundamental developments, right? Or price is a reflection of the fundamentals in the market. So yeah, just kind of like understanding what the actual real life events that are behind like the reasoning for the market structure. But yeah, I think market structure would be my number one thing that I tell people to learn immediately. If you don't know that, then you're basically trading fucking blind, to be honest.
Glad to know I've been blind for years. Yeah, JK a little bit, but I assume it really applies also to NFTs as well. However, just given the liquidity is just a more volatile.
Yep.
Yeah, yeah, makes sense. So, um, yeah, what other like I guess like high level pieces of advice would you have like outside of market structure? Anything on like risk management?
Yep.
Yeah.
Yeah, 100%. I think one of the main things I do if I was starting to trade would be have a paper trading account. I think that's quite important, but there's a very important distinguish between trading a paper or trading account and your real money. With a paper trading account, you do not feel all of the emotions that are inflicted on you with trading, and trading is an emotional game. So you need to be very self-cognizant of your own psychology. And one of the best things I've found is that a lot of these things sound cliche, right? Market structure, but also journaling. Journaling is kind of like understanding where you went wrong in a trade and if your emotions affected the objectivity of that trade. What I want to do as a trader, I want to look at the sentiment of other people and then I want to use that in my own execution. But with me in my execution, I should not. I should be like a psychopath. I should be like a machine. And if I lose, I lost. Okay, I move on to the next trade, and that for me was a very, very difficult thing psychologically to struggle to lose and just accept that I was wrong. And eventually, I get to the point where I'm risking double the amount on the next trade. I lose that one as well, and then just becomes this revenge trading cycle to zero. So yeah, beyond like the whole being cognizant of your emotions is bankroll management. Look, play poker for a little bit. Play poker and go through the big swings and learn the concept of bankroll management and expected value as well. expected value for people that don't know, in poker, if you get a really great hand, you should be betting more because you have a higher probability of winning. If you have a shit hand, you do not want to be betting as much. You want to fold, okay? And in trading in different market environments, it's exactly the same thing. There's a lot of principles that people can learn from playing poker and bring to trading. But yet to summarize, market structure, journaling, and being extremely cognizant of your emotions and how they affect your decision making. And there's no getting away from that. That is a fundamental thing that will always exist in trading forever. And it's the main thing. Emotions are the main thing that drives markets as well. So the more you understand other people's psychology and your own, the better you'll be able to do to counter your own thing. And it's one of those things where you buy when there's blood in the streets. Who wanted to buy after FTX? Absolutely nobody. And I think a lot of liquid funds didn't end up buying because it was scary. It was a scary time. People weren't sure of the future, but in those points of despair or euphoria, you have to act in the opposite manner. One of the rules I do have as well, especially now that we're in a bull market, so this will be useful to know. Whenever I want to take a screenshot of my P&L and share it on Twitter, whenever I get to that moment, that's when I start de-risking a position. Or if I actually remember distinctly being in a room and trading with someone and jumping off the desk and like fist bumping the air, basically, getting really hyped up. And at that point in time, there was a swing top that formed. So yeah, there's like a rule where whenever you start cheering, you start selling. You have to counter your own emotions and be very cognizant of this because, like I said, this is what drives markets.
I'm going to shameless plug here because you did mention open a paper trading account. We are running paper trading right now at nftperp. So if you haven't traded NFTs before, now's a good time. And we'll get you guys whitelisted. Feel free to DM me and in Discord. And I saw Mr. Fox roll in. What's up, bro? And then also, okay, so my biggest thing is, and it is like scary, right? Like when you're seeing, like how do you prevent? I think this is like one of my things is, how do you not catch a falling knife? Because
Yeah.
like I always think like, okay, well, an asset is, you know, falling, and I guess like, yeah, for me is like, how do you know when the right time to jump in is?
Yeah.
And I guess maybe you don't. I don't know.
Yeah, I tell you what, that's it's a really good question to ask, and I cannot answer it clearly because at the end of the day, you are going to get your hands bloody. Um, but it's like, do you want to take the short-term pain for the long-term gain? It's one of those things where you need to really feel the emotions of the market and see if the asset's cheap as well. Is it really cheap? And another thing I actually found very useful because I did like last cycle. I'll happily admit I was buying some Bitcoin at 30K after the 3AC or after the Luna liquidation. I thought it was going to be a temporary bond. It was for a while, but it's one of those things where there's a lot of entities left to de-risk and de-leverage. I do think one of the best things, and I'm going to apply this next time in the next bear market, is time. I think 1.5 years after the previous market top is a very good heuristic to stick by. And if you don't trade if you just trade short, no buying, just shorting overpriced shit during that time, you'll make a lot more money than you will trying to buy the dip. Um, but yeah, with buying the dip, I won't lie to you, you are going to get your hands bloody. And if you're concerned with a 5 year time frame of like a 20 to 30% portfolio move, then this probably isn't the game for you if you're going to be betting in size and you want to win big as well. For me, it's quite scary to do that, but I mean, I didn't come from any money, so I feel like I never had anything to lose. So I think that's kind of to my benefit.
Well, I think one nuance that I just picked up in there, that I don't know if others did, is you mentioned time frame. I think that's extremely important, and also like half the time when I'm afraid of catching a dagger, it's because of my time frame is I'm thinking short term. So I think you kind of there was a little nuance in there that
100%.
is
100%.
important.
Yeah. The other thing I would add on to that is just like understanding like your bet on a specific asset, whether it's long or short, your entry doesn't need to be one single trade, right? You could break up your trades. If you can think about like I'm allocating my my position sizing on this specific play, I want to have 10K, and that represents maybe like 2% of my portfolio or 10% of it, whatever it is. And you don't have to go all in one single trade. You can break them up. You can swap it. You can DCA and feel out the market, understand, are you on an uptrend or downtrend? Are you buying or selling, at the right time? And don't have to think about if you enter at one price and from here on, if anything up, you're up. If anything down, you're down. It doesn't have to be that one binary answer.
Well, the thing for me, and one thing I did learn as well, is people are not demoralized by prices going down. They're demoralized by prices going down and staying down for a prolonged period of time. Because that's when it's like the hopeless situation. That's when it's depression, despair. You can't believe what has happened. It has to come back soon, and it's just not coming back. But that's another part of the market cycle. It's the people can't handle the periods of accumulation. So when smart money's buying, retail have bought much higher, and eventually they just capitulate after a certain period of time, and supply transfers from unwilling market participants to people with much more capital and longer time frames, and this is why smart money wins. But yeah, I think that's a really important thing that people can't handle. They can handle the price if it bounced back, right? Shit can go down 95%, it bounces back 45%. People actually find emotionally. What they can't handle is stuff going down 70% and staying there for 9 months.
Hey, I just want to make one last call. If anyone in the audience wants to ask anything before we close it out, please, ask, request to speak. And just wanted to thank everyone in the audience also for hanging around and listening. I've seen a lot of names just, over the last hour that we've been talking, so appreciate it.
Yeah, feel free to ask any questions.
Yeah, if we don't see any, that's all good. This won't be the last time McKenna comes on to our podcast. And before we go, I just want to quick thank to McKenna. He has been with nftperp since really day one, before we even probably in the beginning of our C round when we start raising our fund. So appreciate you.
And it looks like we have one person coming up, and yes, appreciate definitely you, McKenna. And once Mish gets connected, feel free to ask away, Mish.
Yeah, I do think the NFT perp was a very curious case of one of those things that made sense from a first principles perspective, but I think the general consensus in venture capital was they were just basically fading it. But to me, it did make sense from a first principles perspective. Like I said, the whole speculation cost sidelined the majority of capital. So yeah, to me, it was kind of one of those things you either need to fractionalize it or you need to have NFT perpetuals. So yeah, it's very good to be working with you guys over the. I think it's been a year now, right?
Yeah, over a year.
Absolutely.
Looks like Mish is not on anymore.
I see them. Did you want to say something, Mish? I'll invite you to speak. If not, that's cool too.
All right, I think we can wrap it up. McKenna, thanks again for coming on. This has been a blast. Guys, make sure you go follow McKenna. And in the next 4 to 6 months, he's got some major announcements. So keep an eye out for that.
100%. Yeah, so it's extremely time consuming now, and I need to take some time off shit posting on Twitter. But yeah, working on some pretty interesting stuff in the background. And yeah, it's gonna be great to announce it when it's finally finished.
Yeah, we're excited, and thanks for coming on. And keep shit posting about Spreados though, and
I'll try. I'm never selling my Sproto, by the way, even if it goes to 40 ETH. I'd rather much have the Sproto.
But by the way, in our last competition, we gave away a Sproto, so more incentive to participate in this one. I don't know if I'll be giving away another, but we'll see.
Let's get Sprotos on nftperp V2 after it launches. I definitely think it's going to be a great market to trade.
Yeah. I'm a maxi, so.
Good incentive.
Right,
but yeah, cheers, guys. I appreciate you giving me the time to jump on, and we'll speak soon.
Talk to you soon. Thank you.
All right. See you. Bye.
Bye.
Thank you for tuning in to Look at My JPEG podcast. If you're listening on Spotify or Apple Podcasts, wherever you get your audio podcast from, give us a like, a subscribe if you like the content, and we'll see you in the next episode.